This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and this market is still boring me to death personally. I'm going to take a brief moment to cover the bearish scenario, and then I'm going to just kind of talk through the bullish scenario and how I'm looking at the markets, as well as some sort of cross-market analysis between gold and Bitcoin. So I think that's pretty interesting. And then we'll hop into some charts and see if we can see anything. Spoiler alert, nothing has really changed, so still going to be saying a lot of the same things. There is a bearish case out there, or I should say there's a lot of bears out there at the moment. We can see posts like this all the way back to 3K. We can see more posts like this, which are a little more conservative, back to 50 or 60K. James Wynn's talking about a crash all the way down to 46, followed by a blast off to new highs. And a lot of people are drawing parallels to the prior top from the prior cycle, and that may well be the case. We cannot discount any of these ideas just yet. But I did want to point at a couple of things and say arrows and stuff tend not to be real TA, right? We draw my arbitrary yellow squiggle often, but no one trades based off of the arbitrary yellow squiggle. It's just an expectation, right? It's not really a strategy. I think it's fair to say if somebody asks a trader what their strategy is and their response was, I draw squiggles on the chart, you would assume that this person is not a real trader, right? So I don't know how much weight we can really put on a lot of these squiggles, including my own, that is, okay? I count time, I trade the cycles. I have a system that tells me when I can act and when I cannot act. And despite having demonstrated the power of such a system, right? Despite having built an entire brand essentially around it, and despite many of my daily viewers using and implementing cycles to better their trading experience and their trading returns and profits, when we start to get flushed into cycle lows, instead of do what we always do, which is kind of point at the cycles and say, well, yeah, we were looking for a major swing to form inside of this window. Now it's just a case of waiting for confirmation. My comment section suddenly fills up with, hey, what about the 50 MA, right? What about the MACD? What about this or that or the other? And the truth is, if that stuff worked, I would have structured my trades around it, right? I would be a moving average trader or a MACD trader or whatever. But you've never seen me structure trades around any of these types of things, have you? And there's a good reason for this, okay? And this is super important to understand, right? I do not want something derived from price, which lags, okay? I just want price. Why do I want something derived from price? Completely worthless in my humble opinion. And a lot of people are quick to say, yeah, well, Camel, we've got a MACD cross and therefore it's bearish. Okay, and every other time in history that happened, the price just went into a bear market. Okay, fine. But here's a limitation of using a MACD, for example. Okay, the MACD can trend all the way back down to oversold at the bottom line, okay, whilst the price continues to climb higher. And then what we would say is, well, yeah, this is bearish divergence into the highs, which is indicative of waning momentum. But it's no good at keeping you on the trend, is it? It's no good at keeping you in the trade if the market's still got more highs left in it. And Bitcoin is such a poster child for how silly using lagging indicators such as moving averages tend to be. There's one or two that are semi-acceptable to me, like, for example, only looking for shorts below the 200 AMA. Okay, that just puts the statistics and probabilities in your favor a bit better for short setups. But you can see how ineffective using moving averages is for Bitcoin, because the death cross, which is by all textbook accounts a super bearish signal, but in Bitcoin, it tends to rally out of the death crosses. Now, ask yourself why that is. It's because it's not suitable to be applying such a lagging indicator to something so volatile. By the time you actually get the death cross, the majority of the move down has occurred, and then the death cross tends to be a bullish signal for Bitcoin. So that's entirely useless in my humble opinion, and that's why you don't see other traders structuring their trades around these kind of things, right? And if they do, they don't do very well. They don't give you a hard invalidation and a public stop loss and all that kind of thing. So I think that's important to understand first of all, right? You don't want something derived from price. You just want price. And so given that that's true, when I'm saying things like we should have a cycle low sometime in this window, okay, and of course, as always, we wait for confirmation because we understand the limitations of this system. One such limitation is that sometimes price can extend further, both in terms of price to the downside and in terms of time. So we don't just wait for the timing window to show up and then blindly buy, right? We don't just stab in the dark. We wait for the confirmation, we wait for the turn, we wait for the swing low, the move above the 10 MA, the Brexit cross, the trend line break, okay? And then we can say now we have a high probability, high quality setup to structure a trade around with managed risk as always. And so we get here and suddenly people are like, hey, Camel, can you review the bearish divergence here, there, and everywhere? Look, I don't care. Right? I don't care because this is my system and my system tells me when to act and when not to act. Right now, I have no signal telling me to act. So we sit here patiently and wait for the turn. We wait for all those confirmation signals to fire, just like they did back at the prior lows, and then we will put a trade on, okay? Then we will start to be able to set hard invalidations and move forward from here. And I know if you're new to cycles and you don't really trust them, or you haven't seen enough of them and you don't understand the cycle system and all the rules, then some little voice in your head is probably telling you that this will be the first time ever that this happens, okay? Straight to zero. In which case, maybe just follow this guy instead. But I'm here to tell you, okay, a little bit of patience tends to go a long way in markets. I only want high quality setups. Bitcoin, if you go back over the chart, it tends to spend the majority of its time not doing much, okay, and then it rips in just a number of weeks. But it spends enormous quantities of time between each of the major weekly cycle lows, chopping or ranging or building a base before then we move higher. Now, right now, we just so happen to be in the window for a turn. Yes, it can overrun in terms of price and time, as I said. That's one of said limitations, and that's why we wait for confirmation. Okay, but we have a limitation in our system, and then we have a rule set and a bunch of confirmation signals that enables us to capitalize on such limitation. What we don't do is just see a few days of red or a few weeks of red and start saying, well, you know what, I don't know what I'm doing. I might as well throw a moving average on there. Let's throw a moving average on here, or a MACD, right? Let's see if we can just find some kind of thing to cling on to. If you really think about it, that would be the hallmark of a trader that doesn't have a system and doesn't have a rule set and doesn't stick to their system. If I started throwing other things on that you'd never see me move, it would kind of look like a desperate plea to find any kind of reason to stay long here, right? But I don't need a reason to stay long here, or I don't need a reason to exit the market yet, because I have my system. My system will tell me when to act and when not to act. And right now it's telling me to do nothing. So that's what I do. And just a friendly reminder, okay, the average of these weekly cycles is somewhere between 94 and 95% upside, measured from the weekly cycle low to the weekly cycle high. So if we come back to this chart, from the low, the weekly cycle lows, okay, to the highs before we begin the next declining portion into the following weekly cycle low, the average gain is about 94 or 95%. If you average all of these out, including the 120 and the 70 here, you get about 94 or 95% upside. Now, if the low is in somewhere around this current levels, okay, that gives us an upside target of 177-ish K. And a lot of people think that's impossible, but you have to keep this in mind, okay? This is why it's important to have a system and stick to it. If it does that, many people will be throwing their toys out the pram, screaming this time is different, screaming nobody could have seen it coming, screaming this is manipulation. They'll be pointing to the liquidations from World Mental Health Day 1010 and saying, oh, this is horrible, they ruined everyone, they blew everyone out, and then they manipulated it higher to 177K. But keep in mind, if it actually moves 94% up here, we'll be able to say that it's done that 1, 2, 3, 4, 5 other times in this cycle, okay? It would just be bang average. And either way, we're going to get to learn something, because if it doesn't pop 94% in line with the average of the rest of the weekly cycles, okay, perhaps it pops less than 94 or even less than the 70 we did here. Let's assume this only pops 40% off the high, okay? This would be indicative of waning momentum. Having put in 120% followed by 70, followed by, let's say in this hypothetical example, just a 40% upside pump from here, then we would be able to look at this and say, well, yeah, okay, momentum is waning into each high. Then we can start to say the weekly cycles are clearly losing power to the upside, and thus we are clearly setting ourselves up for left translation in this weekly cycle, followed by a couple of declining weekly cycle lows to give us the 4-year cycle. But again, it's important to maintain this situational awareness and this context, whilst also not throwing the baby out with the bathwater. We can't just say because you feel bearish and sentiment's washed here and because that was the perfect 1064 day or whatever the number is high, it's zero possibility we go to, I don't know, 177K. It's actually malpractice to say that. It's actually very silly. It doesn't matter how bearish it feels. It doesn't matter what sentiment is like. It doesn't matter what anyone's opinions are, okay? Because every single weekly cycle low has yielded 94%. So you've got two choices here. You've got choice number one, to say, I remain open to seeing exactly what we saw in all prior weekly cycles. Or you can say, I believe this weekly cycle coming up now is going to significantly underperform all of the prior weekly cycles. Okay, both are on the table, both are possible, but you cannot just simply exclude one because feelings or emotions or my altcoin portfolio got destroyed, right? That is not a valid reason to say this cycle system is going to fail and completely cease to exist. And I know how bad it feels. Believe me, I do. And I know a lot of people want me to call the top for some reason. But again, remember, this is not a hostage situation. You can call the top if you want to call the top. And I was actually saying the same things here and here. So this is not the first time we've been here. If you've been a long time follower, or roughly a year, let's say a year and a half, then you were here for the prior two. So you know I was saying the exact same things then, and believe me, I'm going to be saying similar things at the following 2 weekly cycles. Although if this one left translates and starts to head for failure, then of course we're going to be saying, well, left translation and fail there. Okay, slightly different to when we're in a bull market because we'll be retargeting the 4-year cycle low again. But all the normal things I say, right, as we get here, we'll be waiting for a turn, we'll be waiting for a swing, we'll be looking for confirmation signals before making any kind of trade setups or adjustments. We will be looking for sentiment to be completely washed and destroyed into these lows and all the other things we constantly talk about. So just keep that in mind, please. Okay, this is my system. I stick to my system. There are no exceptions. Zero, ever. Okay, and I know you might be scrambling to find MACDs and bearish divergences and whatever, and that may in hindsight prove to be correct. That absolutely is possible. Okay, but it would be weird for me, who has an established system, to just abandon it now or start throwing all kinds of random other indicators on the chart and looking for some kind of piece of evidence, right? That's actually the hallmark of a guy that doesn't know what he's doing and doesn't have a system, right? I think it's really important to understand that. So this is my system. I present it every week since I've had the channel, and we're going to continue to use it. And I don't know if this is going to bottom this week, next week, or in 3 or 4 weeks' time, okay? It would be extremely late if it took 4 weeks, but it's not outside the parameters of my system. And it's not outside my ability as a trader to sit here and do nothing for 4 weeks either. I know some of us have got TikTok attention span. They want everything right now. They want to know exactly what price we're going to bottom at and exactly what price we're going to top at. But this is not the prices, right? One day at a time, stick to the system, manage the risk. Everything else will fall into place naturally with enough repetitions over time. And so again, if we did do 94% out of this weekly low, it would not be a surprise. It would just be normal and to be expected based on the typical behavior that this bull cycle has exhibited. And it would put us somewhere around 174, 177k, something like that. At that point, we could set wherever the low is. It would be around 89k at the time of recording, right? We could set that as hard invalidation, significantly above the 74k low we've got at the moment. I think the bears will cry physical tears because they just simply do not believe that 174k in the next 3 months or less could happen. Meanwhile, retail will scream the 4-year cycle is over because, as far as they're concerned, any top other than that and the 4-year cycle is dead, right? They do not understand how we chain together the weekly cycles to give the 4-year cycle. I still maintain a broad-based alt season will never come, and most of those altcoins left translated. This is a realization I'm coming to. Whilst the base case hypothesis on this channel was that this would possibly be a left translation here, okay, and we would do something like this into a top and have an extended bear market decline. We had to invalidate this idea in November, once we put in a new all-time high after the halfway point of the 4-year cycle. But many altcoins actually did this and then left translated and have still been making new bear market lows and have never recovered the high they made from back in December. There are some that have continued to right translate, don't get me wrong, okay? But many altcoins exhibited perfect left translated behavior here and have continued to make new bear market lows. For those reasons, I still expect no broad-based alt season, but I'm sure a handful, as defined by 20 or less, will have significantly higher performance than Bitcoin. If we're going to left translate this weekly cycle, 174k would happen within 3 months from the time the low is confirmed, okay? 3 months out, we would expect the peaks, whether it's the all-time highs or a lower high, to occur within that 3-month window. Before then, we head down into that 4-year cycle low late 2026, and the yellow squiggle would remain undefeated in such a case, okay? Just like this yellow squiggle right here. So we will see, okay? And we are well aware of a bearish scenario as well, okay? Let's not pretend like we're not entertaining. I couldn't have missed the top, okay? Even if the red one plays out from lower down, then yes, we missed the top. So I'm not trying to pretend like I have all the answers. There's been many tops that we absolutely nailed over the past few years on this channel, but we can't nail all of them, right? And our job is not to nail all of them. It's just to do our best to get out close enough to the top to call it the top. But if there's another rip here to 170k, you best believe I want to be on board for that, okay? I don't want to be puking my position into a weekly cycle low only to see this thing snap back and left translate. Remember, left translation in weekly cycles means that the move to the upside should be extremely violent. So do I want to exclude myself from this? Absolutely not, okay? I want to be here, I want to stick to my system, and I also don't want to embarrass myself publicly by getting all the way to these weekly lows and then abandoning them, or pretending like I'm some elite level trader that can do all of this in plain sight and show everyone my public stop loss levels and call all these positions out in real time with the exact entry and exit levels for members, only to then get to a weekly cycle low and puke my entire stack before a massive blow off top move happens, right? Even if the blow off top move doesn't happen, I still have to stick to the system because that's what a trader does, right? If you don't stick to your system, what are you? You're just a speculator or a gambler or some guy that thinks they know it all, right? Step 1, have a system. Step 2, backtest that system so you know it works. And then step 3, trade it and never trade anything else. That's how it works. A couple of other things I wanted to touch on today before we get into some charts, okay, is the gold weekly cycle top is possibly in already. We'll pull up a gold chart here. We'll throw on the cycles. Here you go, okay? It's entirely possible that we left translated this weekly cycle and now we're going to work our way down over the coming couple of daily cycles into a weekly cycle low. Then we should get a big rip. Let's fill in the blanks, okay? Cycle low, weekly cycle low, couple of rips maybe, and then weekly cycle low, and then left translation and failure again, half cycle low in the 8-year cycle, and all of this would not really be out of character for gold. This would just be a big correction into that major half cycle low, and it would make sense given that gold went from something like 1,600 an ounce to 4,400 an ounce in just 36 months or so. So this would not at all surprise me if this is on the cards. And of course, if it is, what does that tell us is likely to happen to this Bitcoin to gold ratio? Looks extraordinarily bearish here, okay? But again, the cycles are a system. They're an edge that tell you when to act and when not to act. This is a weekly cycle low, as is this. They're all very equidistant here. They're all equidistant, and we are due a turn here. Okay, what does that imply? It implies going into year end, we're going to get some Bitcoin outperformance relative to gold. Now, the first question I want to ask is that consistent with what gold's market structure and cycles are telling us? And I would say yes. There could always be another high left in gold, okay? But if that was a left translated weekly cycle and we're now going to head down here, okay, that would be normal and to be expected. There would be some nice short-term swing opportunities in here for sure, but largely speaking, this would just be a big range to consolidate a huge 400%-ish move before then we resume the big main bull run, the big secular bull run, okay, out of the QE and the print in late next year and all of that kind of thing. So the gold cycles and market structure support something like this, even if we had to do a more expanded type correction, okay, even if maybe we had to go to one new high, then correct into the weekly cycle low, right? Big counter bounce and then back down here. Again, it would just be normal and to be expected, wouldn't it? And that's whether there's a new high in it or whether that was the high. The structure of gold and the cycle support that we probably have seen the high or close to it already for gold. So if gold is going to top here, okay, that should allow some relief to the upside in this ratio, assuming Bitcoin can stop falling. But what else do we know about Bitcoin? As I've been saying all episode today and for the past few weeks, okay, we are in the timing window to see a turn here. Okay, record washed sentiment, record bearishness, record amount of top callers, loads and loads of people posting doom charts like this. And if we are to turn around and rip here, no one will be able to say that we couldn't have seen that coming. No one will be able to say that was an unexpected move, okay? That would simply be cycles doing cycle things, which of course would allow gold's topping structure and Bitcoin's weekly cycle lows forming to give this thing a push to perhaps even challenge new highs. Okay, dare I say it, in the worst case scenario, should at least get this before we roll over. But we got a good 3 months, right? These are monthly candles, potentially 3 big green candles here, right as everyone has gotten super bearish and started to recognize this ratio and pay attention to it. At the start of this cycle, I don't think hardly anyone was pricing Bitcoin in gold. And it's funny to me that they've started to do this now, only so they can kind of mock Bitcoin for not outperforming gold, but it is what it is. And if there's anything to this 90-day gold offset, if this is real, okay, then today marks the day. We have finally reached this moment in time here where it should be time to get a rip to the upside. So, don't misinterpret this as me saying we are going to go to the moon today. Okay, don't misinterpret this as me not being willing to tolerate a few extra days of wiggle room as always, or even a couple of weeks, right? I got time. I don't know why a lot of people haven't got any time, but I got plenty of time here. Just let the market do what it's going to do, okay? And my job is to just wait until clarity shows up and then capitalize on that from a high probability, high quality setup perspective. But one thing we know for sure, okay, is since I posted this chart, we moved down here a little bit, maybe not quite that far, and now we're getting ready for this, okay? Just like we had this move here, and now we're getting ready for this. So it's do or die time, right? We're going to find out soon enough. We've waited this long. Trendline breaks are coming, I reckon. And it's also of note that Bitcoin usually rebounds when traders realize loss margin falls below minus 12%. And at the moment, it's minus 16%. So again, it speaks to the number of panic sellers, the amount of sentiment wash and reset we've had. The turn is coming, okay? And I really think it's going to rip people's faces off. I just think that the sad part of it is too many people will have been washed out here. So let's see. We kind of already done gold, right? We'll see. We'll see another high left in it, and then it can start to correct. And if not, that was the weekly cycle high, and Bitcoin's set to outperform over the coming days and weeks, as we said already. The stock market's in the middle of a correction, on its way to that daily and weekly cycle low. So again, you know, cycles doing cycle things, not really something we couldn't have seen coming. I've been talking to the level 3 members that this will probably be the final ad into the year-end rally and perhaps even into early Q1. But once we get to this timing window, we're going to add this and the Russell and the semis, double the exposure. So we'll have this position like this, let's say. Okay, something akin to this, double the exposure, move the stop up from the first position under here, and then look to sell the whole lot higher up on a trend line break. And we'll probably be doing that for the Russell position and for the semis that we acquired at the spill. Like, where's the semis here? Okay, so we bought this out of the lows after everyone was screaming it was over at the last weekly cycle low, frankly, back in April, right? After the tariff spill, this market top to bottom's done something incredible, like 130-ish%. And so kind of expecting something like this again, right? Weekly cycle low, move up, reset the trend line, add another position here in the long-term account, move the stop up from the first position up under here as well, and then look to sell very, very quickly upon a third angle breakdown later in the year. Okay, so that's what I think is coming. And that's going to be the strategy. It's been the strategy, and we're going to stick to it. And Bitcoin is there or thereabouts, isn't it? As we know by now, a million times over. Okay, it came a little bit lower than expected, but soon it will turn, and soon it will confirm we've got a new low with the trend line break and everything else. Okay, and then it'll be time to see if this yellow squiggle is in play or if we've got to do something more like this. But you already know that by now. I almost forgot one last thing. We were talking about yesterday seeing something occur this week for the yields to push to the downside. And I was saying that this has probably got to happen ASAP because we're getting closer and closer to the 10th of December when the FOMC meeting is. And the yields need to quickly and sharply move lower in order to put rate cuts on the table, which, as you can see from the bond futures, okay, is 50-50 at the moment. So to get this to put the rate cuts on the table ASAP, we need the 10-year chart of truth to move to the downside and do that ASAP. And so I was saying, I don't know what, but this is one of those times where it should be a show me the chart and I'll tell you the news type of deal. So I was saying something will come out this week that will catalyze this, in my opinion. And a bunch of you members pointed out to me that we have got jobs data coming out tomorrow, apparently. So I wonder if we get some JOLTS data and for some reason the market uses that, or the bond market in aggregate uses that to put rate cuts on the table. I'm not saying it will be the jobs. I frankly don't care what it is, but I'm just saying it's in the charts right now that we need to move lower and lower sharply. So we'll see if we can get that. If we don't get that, fine, right? It doesn't really make any odds to me. It doesn't really change much, but I think this is just one of those times where we're going to see this move sharply to the downside. And that also should catalyze the rest of these markets pushing higher. So it's going to be an interesting week. I hope you're all doing well. Try and stay away from the tape slavery and the toxicity online. It's not going to do anyone any good. Okay, stick to the system and everything will be fine. I'm your boy Camel. All the best from me. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us stormies on a bumpy ride.